Hey everybody, this is John. Welcome to the free video, and let's take a look at the spiders here and a couple of other things. So the spiders continue to stay in this. They've been in this for a little while now. Continue to stay in this downward channel, and we have this squeeze. And it's been one of those things where we're trying to watch and see, like, okay, is this squeeze going to trigger to the upside? And we're up, and away, or is it going to go to the downside and we test the bottom of the channel again, possibly 230. And it's really just been very sloppy. And my default rule of thumb is, look, if you're trading below the 21, don't fight it. You know, the path of least resistance is lower, right? But what's interesting here is that if you look at the Qs, you don't have that same, you know, this is sideways, and this squeeze could go to the long side. And so in this kind of environment, you're going to see chop. Okay, and that's fine. I mean, chop, you know, a lot of times chop has a bad name, right? It's like, oh my God, chop, and this, you know, chop, they call it chop because, you know, you get chopped up. But if you understand that it's choppy, you can take advantage of it. And so that's like, you know, a lot of the option strategies that we've been doing have been more to take advantage of chop. And so this has been great, you know, with Microsoft just making $300 a day, every day, or if it does nothing, get to capture that theta, okay, and or Nvidia, you know, same thing. It's like, okay, let's just sit here and capture that premium decay in this chop, or Apple, you know, let's just capture that premium decay in this chop. Tesla, same thing. Let's capture that premium decay in this chop, and not really worry so much about direction. Now, that doesn't mean that there aren't any opportunities for direction. And I think that's one thing that we want to keep in mind, is that there are some interesting opportunities for direction here. Which we'll take a look at. And let's take a look at a couple of other things here real quick. So in terms of the VIX, you can see that, you know, it got a little push here, but you'd see once it broke, it came to the mean very quickly. And once it came to the mean, it found support, which means it can start accelerating again. And you can see this kind of ledge sitting up here on the spiders where we could start heading to the downside there. But the other thing you want to keep in mind here is the skew. And when the skew, for those of you that don't know, the skew, when it gets above 135, the downside risk increases. Okay, and you can see here 135, you know, boom. Got up there, and just kind of at this point, you know, boom. You can see right here, in fact, let's back up here a little bit. Up here, and then boom. So the downside risk increases quite a bit, but more importantly, when it's up here, I've just never seen a rally. You know, not a sustainable one. So usually it's, you know, if anything, at best, sideways market with the potential for downside. So in this kind of environment, we're not super excited about the long side, right, unless something specific sets up, okay? So I want to talk a little bit about here, let me move this over here a little bit, just about tools I've been using in this market. And what I found to be super valuable and what I found to be less than valuable. And so let's just kind of dive into this. And this is something that I've been calling the triple squeeze, but the idea is just looking to see when at least three, you know, a market, a sector, and a stock are all in a squeeze at the same time. And I've just found that to be super useful. And so for Tesla here, I mean, we caught a nice trade here, and essentially it's like, okay, we had a couple of things that were lined up there. And what's nice about this is that it just brings a little additional power to it, right? And I'll explain this more in a second, but let me show you an example of what I'm in right now. So this is Chipotle's. And Chipotle's here has been a big winner for us, and I'll show you this here in a second. But what we've been watching here is you can see that there is this flag here, right, on a daily chart. But then you could see that some of the consumer-related stocks, which where a lot of restaurants are, were also in squeezes. So Chipotle's wasn't in a squeeze, but restaurant stocks were, okay? And when you see something like that, especially combined with short interest, you get these greater than expected moves, okay? And this tool here tells you, it's like, hey, you know, as of right here, we're showing you, like, in the next 2 days, you can expect the stock to go here, you know, 9 days here, 16 days here. So whenever you get into the trade, you just mark that spot. And it's been working out really, really well. And so while every other trade I've been doing has been focused on, you know, non-directional trades, CMG has been the exception here. I mean, you can see these 465 calls when they triggered were $8.67, and now here we are up, you know, 2.5 times. which has been fantastic. And then we've got some 30 days out just in case this thing really just kind of keeps on keeping on. And I wouldn't have found this if it wasn't for these tools. All right, so how do they work? Now, when it was funny when I first introduced these tools, I had talked about how, like, hey, and this was back, I mean, time flies when you're having fun, but I think this was back in, maybe mid-March, second week of March. And I said, hey, my account's, nearly doubled in 2 months. And so, okay, so now today's April 19th, so where is my account now? So my account started off with a balance of, $117,000. And then it's like by the time I did this webinar, you can see the balance was $263,000. So at that point, let me move this up here. Started at 117. You can see at this point in time had profits of 152,000 less commissions. So net liquidating value, so 118%. So okay, great. So has this continued to work as of April 19th, which is what today is? So, if we look at where we are now, you can see the balance is $394,000, again, starting at 117, and year-to-date profits of $287,000. So this stuff just continues to work over and over and over again. And this chart right here is probably an eyesore, but here's the main premise of this and why this is so powerful. So you've got a chart here of Facebook and another chart here of Facebook, okay? And they're both 195-minute squeezes. And I just want to show you the power of one or the other. So here's Facebook. And I love trading Facebook. So here's a 195-minute squeeze on Facebook. And you can see here that this was a failure. Okay, it was a failure. And look, the squeeze has a success ratio of 75 to 80%. But I would always like to know in advance, like, when is there a high likelihood that it's not going to work, right? Well, guess what? If Facebook has a squeeze, but its corresponding key sector, okay, like XLK, or the Qs don't have a squeeze, it's not going to work, okay? It's not going to have a great move. Versus this squeeze, you can see it's like, okay, Facebook had a squeeze, but you can also see the spiders had a squeeze, the Qs had a squeeze, and XLK had a squeeze. And when that happens, I call it a triple squeeze because I'm just looking like, okay, do we got an index, and a sector involved here in the stock? This, in case it was a quadruple squeeze. Look at this move, and that's what we're looking at for, is a greater than expected move. And when you can get a greater than expected move, you can get outsized returns like we've seen, like with CMG and other stocks this year. All right, so for the first time ever, we're going to offer these indicators here on a standalone basis, meaning that you can just buy them outright. If you go to simplertrading.com/shadow, we do have these for currently Thinkorswim and for TradeStation. And I think they're looking at some other ones here too. You can see here's the triple squeeze indicator. This is going to be listed on our site. We're just now releasing these for $597. And then this expected move target, this essentially tells you where it's going to go. When there's a triple squeeze, it's like, okay, look for it to go, to this level, which is great. And that's going to be on our site for $397. So we are going to be doing a package with these. And just so you feel comfortable using these, it's also going to include a free full day of live trading, so you can see how I use these indicators real time. And that trading will be on April 27th. So what we're doing with this is that you get both. You get a discount instead of $597 plus $397 for the indicators plus $197 for the class. You can do all of that for $697. So you get the triple squeeze. You get this target indicator, which has been fantastic, plus a full day of live trading where we can hang out together. So this is, to me, has this made a big impact in my trading this year? Yes. Is it easy to use? I find it, once you understand the concepts, it's very easy. It very much enhances the trading. And the whole point of the live trading session, even if you can't attend it live, you can get the recording of it, is to show you how I'm setting this stuff up. And it's actually been a lot less stressful too. So hope that helps. And again, simplertrading.com/shadow. And see you on the other side.